Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on some names in the shipping sector, looking at DRYS ESEA and SINO. And if there's one thing that this shipping sector is getting very well known for, it's extreme downtrends with very short-lived bounces to the upside. And if you are trying to play these bounces, the odds are stacked against you because you're fighting the trend. And if you see 10 red days in a row and you get 1 green day mixed in there, obviously your odds of success trying to play bullish are extremely limited. The trend is your friend because it's a lot easier playing with the trend, and the odds of you making a successful trade in that direction are a lot more likely. So anybody that's been playing the shipping sector bearish has been doing really well as long as they honor their stop losses and don't get stuck in a short squeeze. So looking at DRYS, we have this very tight range. And again, look at this move to the downside. We see a red day. Literally more than 90% of the time we're getting red days. So if you're trying to play bullish and you're trying to capture that 10% of the time that we see green, you're obviously going to be struggling. So looking at this bounce, we had a bounce play out. We got a tighter and tighter range. The last video I did, I pointed out the key must hold support down at 385, the lower highs, the middle Bollinger Band resistance, and we got so tight here that we saw a move to be imminent. Then after hours Friday, we get some news, and I believe we have more dilution coming, and we're going to see a gap down on Tuesday. I believe I saw it after hours trading in the low $3 range. So looking at the weekly time frame, this stock is an extremely sick stock, and it's never going to recover. The only way that this stock is going to recover is if it continues to do reverse splits. I think we've had 4 now in less than a year. That's absolutely absurd. That is the biggest red flag that you can have in penny stock land because this stock was up in the multi-$1,000 range. Of course, it's accounting for those reverse splits, but if you bought 1,000 shares a year ago, you now probably have a couple shares to your name. And that is because this is a very sick stock and it is going to either go bankrupt or get bought. I don't know what the hell is going to happen. Excuse my language. But if you are playing bullish, it's a really bad idea. So in these videos, I try and give as much caution as I can. It's playing with fire. If you guys remember Sun E, the solar name that just kept dropping, that was a sick stock, and we knew that something was in trouble, and it ended up going bankrupt, and tons of money was lost there. I got messages from people that lost their entire child's college funds and just terrible, sad stories. This is what attracts gamblers, and if you are a gambler, you don't belong in the market, and you'll find that out very quickly once you lose all your money. So I hate to be brutally honest here, but playing this sector bullish is just a really bad idea right now. Playing this sector bearish, really good idea. So looking at ESEA, this 100-day moving average resistance, which is currently 188. Look how many times we've rejected from it in the past couple of months. 1, 2, 3, 4, 5, 6 times. So clearly we're struggling to get over that level. Must hold support is down here at 160. And then down to 157, a break of 157 is game over for the bulls in the short term, and we'll be looking down at 135. So another one, look at this long-term chart. Let's zoom out to multiple years and see how the bulls have been doing in this name. Well, we're down. From 2014, we're down about 90%. So it's a huge dump to the downside. There are spikes to the upside where traders, people that know to get in and out very quickly, know to honor their stop losses and not get stuck holding the bag. The last thing you want to be doing here is getting stuck holding that bag. And we see a lot of weakness on the weekly time frame. SINO, 1 big bull day to the upside, followed by 4 red days to the downside. We do see decreasing volume. I do anticipate a short-term bounce back towards the mid to upper $3 range. Very short term, and in order to change this trend for SINO on the daily time frame, we can see we are in an uptrend on the weekly time frame. So here is a change where you are playing with the trend if you are playing bullish. Since the start of 2016, we've been in a nice uptrend. We did reject on the weekly time frame from the upper Bollinger Band. It shows a ton of profit taking with that big upper wick. We have a gap to fill to the downside at 281. Right now, the bulls are defending the middle Bollinger Band at 302. I would keep an eye out for a bullish reversal candlestick on Tuesday to indicate consolidation is done for now. If we see another lower low and we break the low of last week, 298, then we will look to fill that gap. But like I said, I do expect a short-term bounce after a breakout. We have what we call reaching an equilibrium, where we have the high, the low of consolidation, then a lower high and a higher low as the range tightens. So we are looking for a lower high to be set in the mid to upper $3 range, and that should occur in the short-term future. So SINO does have an uptrend to be playing in favor of the bulls, but you need to zoom out and look at the overall trend, because obviously anybody trying to play DRYS or ESEA or a lot of other names in this sector, they are fighting the trend. And it's essentially an analogy to use it with is a strong current in a river. And if you're trying to swim upstream, obviously it's not going to go well. You want to be with the trend, swimming downstream. And right now, don't mean to be brutal in this video. I'm just trying to, it's just really hard to get through some people's heads not to do this. So hopefully you're not stuck holding the bag. And if you are, time to get a stop loss level. I would not be anywhere near any of these names bullish unless I put in a stop loss literally within 1 minute of placing my entry into that trade. So if you're comfortable trading and you have experience and you know quick moves and know how to get in and out, there is some money to be made on these short-term pops. But other than that, it's really playing with fire. So I hope you have a great long weekend. Thanks for watching.